me some shit. Like, she really, like, I made her mad. Like, I didn't even do nothing, bro. It was so bad that she spotted me. I made her mad. She was like, I'm keeping it. Like, just text her instantly. I'm like, yo, I pray you not carrying it like that because you just seen it. Like we already said it. Like,
What's up, guys? I'm going to start in just a couple of minutes. I just want everybody to get a chance to hop on.
With your vote, the $10,000 for help me to build more house and build a digital senior platform. So you can get a workout, and you can get a workout. All that you can get a workout. Like, here ain't for me up there. That's all I'm saying. So there's weight in the rope.
Seven people on now.
yeah, can you hear me? Yo, can anybody hear me?
I'm going to go into what I'm typing out when I start. Just give me a minute. Just start in the next minute or so. Okay, so I'm going to get started. If people are on here, there are 5 more that confirm that should be on, but well, I'm not going to keep you guys waiting. But everybody that's on this call, have you guys been on previous calls of mine? Type yes or no. That way I know kind of how much stuff everybody knows or how much stuff I should go over. So has everyone on this call been on at least one of my other calls? Yes or no?
Yeah.
Esteban, you haven't? Yeah. It's just All right, Aspan. So basically what I do is I go over trading, training. You know, basically what I'll do is I'll explain why I market the charts the way I do, kind of my outlook on pairs, stuff like that. How long have you been trading for? Esteban?
Sorry. I actually put in my first trade last night, and I got 2 other live trades open right now.
Oh, that's up. So what do you know? Like, do you know the basics of of trading, or do you want me to go into depth a little bit?
Yeah, I know. I know the basics. I don't know like that much. I tried getting into this about a year ago, and I kind of fell off. But now I'm like trying to get back into it. So I know more than I would say the average beginner, but I still
Okay.
wouldn't know much.
Okay, for sure. So all I'm going to do is I'm going to break down what I do, just in general of how I market my charts. So first, I'll go to the daily and I'll look at trend. All right. So I see that right now price is trending up, and right now, see, people think that maybe it's reversing. I don't know. Personally, it could be, but I still want to see more signs of bearish movement. So what I'm going to do is I'm going to mark up quarter points. So what quarter points are is it goes back to quarters theory. It's a very big part of how I trade. So basically what it is, it's broken up into 250 pip increments. So what I mean by that is when you think of a quarter, you think of, either 0.25, 25, or when you think of 4 quarters, you think of, a dollar or whatever it may be. So it's just like with trading, you want to look at where the nearest major quarter point and nearest 2 most major quarter points that are near prices at. So what I mean by that is what you do is we like to identify psychological levels, meaning that we like to look for areas of the market that are whole numbers because it'll show us potential signs of either a reverse off of it or a wick to it. And by that, I mean a long little wick and then a retracement back down, or come on, oh wow, that's crazy. Yeah, it was raining pretty bad here too a little bit earlier. But anyway, so what I'll do is I'll mark up major quarter point here, and my next one is actually at 120 because it's every 1,000 pips. Okay, so then inside of that, what I'll do is I'll mark up my minors. So I'm gonna do 112.50 because this is 110, this is 120. In between is going to be 112.50, and that's going to be a minor quarter point. Okay. The reason that's a minor quarter point is because every 25 or 250 pips. So the next one that I do is going to be 115. Why? Because it's every 250 pips. 250 pips and 250 pips. And then my next one is going to be at 117.50 because it's every 250 pips. So all I'm going to do is I'm going to go over here, double click it. This will come up. I'm going to change it to 117.50 and look. So right now, I personally think it's still going up. I think we could see it test this halfway point or 115. The halfway points are very important because it kind of sets the tone for the rest of the trend. Because what I mean by that is if this breaks 115, this has a lot of momentum to go up. But if buyers weaken out right here, we can start to see it come back down. So what you want to look for is you want to look for multiple tests or areas. So you see how this kind of acted as a floor and acted as a ceiling, all at these points. Here I'm actually going to get some ellipses so you can see. But see how here it acted as a floor, and then all these points right here, it acted as a ceiling. And mind you, this is a daily time frame, meaning that this is a lot of movement. Even though it doesn't really look like it, this is a lot of movement. So if you would have caught, hold on, not that I'd sneeze. If you would have caught this movement from here down, you would have caught 250 pips. Or if you would have caught up here, another 250, and then this would have been 500 all the way down here. Just from, let's say you like doing your markups on the hour. All you have to do if that happens, you just drag it. You just drag it up. But if you do your markups on the hour and then you say, oh, look, the day is almost ending, I'll go out to my daily time frame and I will have my quarter points already marked up, and I'll say, where did price end today? And if you see a lot of wicks like this near a major quarter point, chances are that it's going to go down. So what I do is I'll either place my buy with a stop loss down here or my sell with a stop loss up here. And since it is the daily, it's going to be a bigger kind of spread, meaning you're going to have a wider stop loss, which means to not over leverage your account and use risk management, all that good stuff. But basically, quarters theory is just a breakdown of additional support and resistance using what's called psychological levels. So that's how I start out by marking my charts. Then I'll go down to a 4-hour time frame, and I'll see if anything crazy is happening on 4-hour time frame. All I'll do is I will look and I'll try to identify a potential trend line. So I'll drag a couple out, see if these could be potential trend lines. I like this one. All right. So I'm gonna see this is a potential trend line. This is on a 4-hour time frame, meaning that this is a higher time frame trend line. What that means is that higher the time frames, basically the stronger the confirmation. So let's say I were to draw a trend line on the monthly time frame. So I'm going to draw one going down. Okay? Draw one going down, or see, I even like that. It doesn't look that good. Let me draw a better one for you guys. Say like this. All right, like this for example. If I draw this out into the future, and I see a bunch of wicks, mind you, this is a very high time frame. Let's see, I'm just marking my charts to see a bunch of wicks like this. None of this has happened yet. And I'm going to go down to my smaller time frame, and I'm going to say, oh, look, price is near a monthly trend line. So I'm going to be looking for potential buys all the way up. And, if you would have bought this big monthly candle, that's 1,200 pips. All right, you could have potentially made $12,000 in a month on a higher size account, or 1,200, whatever it may be. You're making money from your phone, and you can't be greedy. But the higher the time frames, the stronger the confirmation of kind of what's going to happen. So anyway, I'm going to go back down to my 1 hour. Okay, I have my 4-hour trend line drawn out. Here, I'm going to delete this. All right, and then I'm going to put on my session breaks because it's how I draw Fibonacci. Basically, Fibonacci is Fibonacci retracement tool. It simply gives you another strong indication of where the market may retrace, meaning where it may go back to or retest. So how I get my Fibonacci retracement tool is I go over here. If it's not right there for you, just go down to see Fibonacci retracement. And how I draw mine is I'll go from, so this is the start of a new day. I will go to the previous day, which is right here. And I will see, did the market trend up or did the market trend down? So I see that it trended down. So I'm going to go to the highest point and I'm going to draw it to the lowest point. So right now, I see prices just kind of doing its thing. It actually came up, retested a 38.2, and all that means that this is a key level. Okay, 38.2, 61.8, 88.6. All these are major key levels right here, meaning there are areas of the market that tend to be respected depending on the trend. So let's say I see prices pushing down and I see it pushes up like it did here. I would either look for price to keep dropping right here, which it did, or to maybe come up here and keep dropping. But here we saw a nice 38.2 rejection and bam. So maybe what we'd be looking for next is maybe a push below this negative 27, and then maybe retest and then keep dropping, retest, keep dropping down to this minor quarter point or 112.50. And this would be probably my take profit one if I am selling like right here. But let's see, I believe price, I'm going to draw it for here to see what happened from yesterday. So you see what's crazy is that just from drawing this, you saw that price came up and retested negative 27, which is a very key area, several times, and that's how it drops. So if you would have gotten in off of that negative 27 when you saw those wicks, you would currently be up 96 pips right now. 96 pips is not bad. You could be up $96. You could be up $960. Overall, 96 pips is very good for one trade. So next, after I have, here I'm going to draw this out, draw it back out again. After I have my Fibonacci tool drawn out, I am going to look for other areas that I can use for support and resistance. Let's change this to a different color. No, I actually don't like that as support and resistance. I like this. All right, and then I'm going to draw out a zone. How I draw out a zone is I will go from a wick and I'll go all the way out. So if I see there's a wick like this, I will go all the way out like this. And if you just want to drag it all the way back too, you can do that. But making sure that you know that I drew this out to the right, because I have a support right here, and I have a zone also showing that price rejected it, and price could have maybe came down. As long as the zone is respected, we are good. And then now what we're looking for is we could potentially be looking for let me change the color. We could potentially be looking for, see right now it's pushing down. We can see this. It might not even be that big either. I've seen just little candles that'll just have a wick like this off of 61.8 and it'll just keep dropping. So it could just do that. And then it could keep dropping because that's still considered a retest. Because it retested that 61.8. It didn't just, drop. It retested that area. So it could wick right there, right here, and it could keep dropping, or we could see it come all the way down to here and or come right here and see what would happen. If I saw it break this 4-hour trend line, all I'm going to do is maybe wait for it to come back up. This is also a negative 61.8 area Fibonacci retracement, which is again a key level. So I would wait for that, which is also a 4-hour trend line. So a lot of good, they're called confluences, basically confirmations lining up, that this could be a very interesting point. That could price could reject and it could continue shooting up because it is on a, if you look overall, price is still overall on an uptrend. All right. So that's why we're not necessarily looking for sells right now. We want to see the bigger picture. So we want to see it either break down below here. Honestly, I wouldn't even be considering a sell until it came down here and maybe retested this minor quarter point and then continue dropping down to, you know, major quarter point. But that's what we could be looking for a potential setup. I'm going to send a picture of this into the group. For you guys to look at if you would like. But that is my analysis for you, Jay. If it doesn't, or if it fails to break either the trend line or the area of Fibonacci retracement, what are we looking for? Since it's still an uptrend, all we're looking for is to price to respect and continue up. And maybe retest a key area right there. And then keep going up to the next minor quarter point. All right, so that's what we're looking for in the short term. Continue pushing down or reject and push up to end the week. But I think this is a nice, whoever caught this push down off the -27, that was a nice trade. I'm going to go over a Euro odd next. I know Greg likes that pair, so I'm going to go over Euro odd. Everything making sense for everybody that's on right now? Any questions I can answer at the moment? If not, if nobody has any questions right now, then I'm just going to keep going, keep rolling with it. So if you have any questions, type it in the chat box and I'll answer them. If not, then just say you got it. We're good. Good? Everybody good? Cool. I'm going to take guys yes. All right, awesome. So I'm going to go back out to the daily. All right. And this pair is a little weird as far as price. So what I'll do is I'm going to see how far 1,000 pips is. So I'm just going to go to 140. And drag it up. All right, so 140 to 150 is going to be my major quarter point. So I'm going to go to here, horizontal line. I'm going to make it blue. Major quarter point, and I'm going to do 1.39, or I mean 1.4. And, oh, this is interesting, and 1.5. So price is trending, or price not trending, price is hovering over this major quarter point right here. So that, honestly, Euro odd is at an interesting point right now because it could just keep going up like it has been. It's been an uptrend, or it could come back down. And that would be a very nice sell to catch off of 1.5 rejection. So Euro odd right now, interesting place to watch. I'm going to keep marking it up. So since my major quarter point was 1.400, my minor quarter point is going to be 1.4250. And my halfway point is going to be 1.450. The reason is because 1.40, add 250 pips, 1.4250, add another 250 pips, 1.45000, and then add another 250 pips to make 4, and that's going to be 1.475. And if you see what's pretty funny is that this here, let me mark this one. 1.3. Euro odd. There are certain pairs that respect quarter points more than others. So like with this, you see how it kind of hovered a little bit above it, but then it came back down. It had a reversal candle underneath a major quarter point. It pushed up, it retested it again, and then it continued up from there. And let's see if this is a 1.25. So like I said, yeah, there are certain areas. This daily candle, I have no idea what happened there, but that is wild. That'd have been a nice little snag too. But like I was saying, some pairs tend to respect quarter points more than others. So I'm going to look, I'm going to see prices near major quarter points. So I'm going to go back down to I'm going to go down to my 4-hour time frame, and I'm going to see what's kind of happening on the 4-hour time frame. So I see that there's a lot of little resistance / support right here underneath this minor quarter point on a 4-hour time frame. And this is a nice little area. So honestly, we could be looking for a nice potential sell position. To be honest, if we see, I see a little trend line, little 4-hour trend line working. Or hold on, I don't want that. Ooh, I do like this though. All right, so what I'm looking for is I see price near major quarter point. This is a nice zone. So right now I am looking for price to come below and retest this area. And like I said, once again, it might not be a crazy big retest. It might just be something little. And then we might see a shoot down and then another retest and drop down to this minor quarter point, which would be a nice 250 pip catch. So I don't want anyone to miss that if that is what happens. And then all you have to do is just keep moving your stop loss into profit, into profit, into profit, into profit. And I'm now, let's see, I'm going to go over to the 1 hour to see if we look for potential entries. Yeah, so right now I want to wait to see until it breaks below this this 1 hour trend line, or this 4-hour trend line, I mean. Because right now it's just kind of in a little zone. Comes down, up, down, might go up, down. So right now we're just waiting. That's why I tell people, the key to successful trading is you got to be patient. Right now there's no signs to either sell or buy with what this is giving us. Don't sell or buy. All right, we want to just wait. So I'm going to draw out my intraday fibs. And I saw it trended up yesterday. Okay, so I see that price is near 38.2 after it broke it, and it's a major quarter point. So I might, if I want to place a sell position, if I like what I'm seeing and I want to place a sell depending on how the candle closes, I would say 30 pip stop losses. 30 pip stop losses are good. And let's say I'm going to take profit, I want to have down at this 127. All right, so I'm risking 30 pips to catch 93 or 94 pips, which my take profit is down to this 127. I personally think that's a good risk to reward ratio. If you don't have to take the trade, but that is my little analysis for Euro odd, just because of where price is at and how it's been reacting over the last couple of days. It has been downtrending. All right, it has been downtrending. And it hasn't been able to break this high right here. Now, if I saw, my stop loss is already here, but if I saw price break above this high right here, then I would be looking for retest and then buys on the way up. But found a way for a nice bearish candle, take the sell, retest, and then drop. I'm cool with catching, 95, 96, 97, almost 100 pips on on one trade. That's good for me. But that's just me personally. That's my analysis on Euro odd. Just kind of waiting to see what happens. It is an interesting spot, like I said. But let's see. I'm gonna go over GBPJPY. All this is just repetition. People don't understand that. It's just like anything. It's like with like basketball practice or football practice or with anything like that. Like you have to practice. You can't just go into games and think you're gonna do incredible, because that's just not how it works. You have to practice and you have to, have repetition to it. So you can see, either the mistakes you made or things like that you need to fix for yourself, whatever it may be. Here, this is a beautiful trade. Off of 127, you have a bunch of wicks. And what I say, like last time, this was a retest off 618. You could have got in right there as well. Could have got in after the strong push down. Look what happened down here. Could have had another entry right here off a retest of negative 27, and you could have had another entry right here. So you could have 1, 2, 3, 4, and then that would have been your fit. That would have been your initial, so 5. You could have 5 entries right here with your first one in profit, 175 pips plus 4 other entries. You probably would be up 400 to 500 pips on this one trade. All right, so in one day, you would have made either 500, you could have made 5,000. It's just that's the power of it. And people don't understanding how to utilize stuff like this and being able to draw it out, in your sleep is the biggest thing that you can, do for yourself. Teaching yourself any type of skill set that'll literally feed you for a lifetime. I bet you just reversed that another area. Oh, look, what happened? Negative 27. And even so, even though this was an old negative 27, look, price still respected that, but it was a 127 this time. So I mean, like, Fibonacci is incredible. Fibonacci is literally incredible. I'll draw it right here. See what happened. You see, this is a little tough one. I actually caught myself slipping because it trended up. Even though it looked like it might trended down, it trended up because you see that this lowest point, there was no other low point for that day. Oh, look what happened. Broke below negative or 61.8. Even this 88.6. Buy, take profit at the negative 27. Buy at 61.8. Take profit at the negative 27. And you're just trading in that range. Yeah, so this is just levels of the market that are levels that the market respects. Okay, so Fibonacci, how I draw it is, so this is a new day, right? This is yesterday. New day, yesterday. I see price trended down. Okay, price trended down. We see that. We saw that market was here, dropped all the way down yesterday. We see that price trended up for this specific day. Went up because I'm looking for left to right. Now when I'm looking for left to right, we saw price went down. When I'm looking for left to right, we saw price went down. When I'm looking for left to right, we saw price went down again. So in reality, price has been going down for the last couple of days, even though it's been looking like it's consolidating, which I mean it has been. But we're going to draw our Fibonacci from the highest point of yesterday down to the lowest point of yesterday. Okay. And right now we see negative 27. We see it respecting that, but it's been pushing down. So we're not going to buy. We're not going to get greedy. If anything, I might wait for a retest to come up here to 38.2. And if I see a nice bearish candle, then I'm taking a sell off of retest of a key level. But the key levels you need to understand, or the areas that you need to understand are key levels, is negative 27, negative 61.8. And a lot of people will try to overcomplicate it and be like, well, why is that a key level? Don't overcomplicate it. It literally is what it is. This is a key level because it's a key level that has shown that the market respects it. You know, people will say, well, what makes 61.8 so great or so cool, or why is it respected so much? It just does. It just does. You can't question so many things, or else you're not gonna see the results you want to, because you're gonna overthink it. Ooh, no, I don't want to do that. All right, and then 127. And 161.8. All right, these are very important levels to watch for the market to respect. So we see it touched it, wicked it, but once again, like I said, this has been trending down. It's been pushing down over the last day, so we're not going to buy it, because what could happen? It could just keep dropping. It just keep dropping until it hits an area that the market just respects. And then if we look for a nice reversal candle, like let's see where there's a nice reversal candle at, so I can show you guys. Or even a consolidation of multiple tests of areas, or consolidation, then some type of signal indicating down push, like this long wick, whatever it may be. Just understand that candlesticks, or understand the importance of reading candlesticks, will really help you progress. There's a lot of books about how to read candlesticks. I'm trying to think of a specific one right now. You can search it, Forex candlestick books, and it'll give you so many of them. But get a couple. Invest in yourself. Invest in reading the charts. Because if you're like me and this is what you want to do for the rest of your life, yes, I want to do this for the rest of my life, as well as invest in other things, then it's important to understand what every candlestick represents or means. So, like I said, once again, price at negative 27. We're waiting to see what happens. If I see a push below here, I'm going to wait for the candle to close, which it would close at 1 a.m. or 12:59 a.m. because this one has 47 more minutes left. So it could do whatever. What I'll do is I'll set an alarm on my phone for the ending of an hour so I can see how that hourly candle ended. That way I'm not constantly watching the markets, and I can just see what happened in the hour and then make my decision. If I don't see what I like, then I will wait for my next hour to go off from my alarm, and I will determine what I'm going to do after that hour. It's a waiting game, and it's being patient, right? Is there any other pair that anyone wants me to go over specifically? Did that help you with your understanding of fibs, Esteban?
Yeah.
Cool.
Do
And
you
like I
know
said,
gold?
gold.
Yeah, USD. Yeah, XAU versus USD.
Yes, I can go over that real quick.
Appreciate you, bro.
Yes, sir. Not a problem. I actually called out gold last night. I don't think I called it in the group. But I posted on my Snap story. But right now, we see where price is at. this is actually considered an inverted head and shoulders. If you guys don't know what inverted head and shoulders are, it literally legit looks like a upside down head and shoulders. So shoulder, head, and shoulder. The